Hey folks, Dan Frio here, your nationwide loan officer, talking today about second homes. That's what we're going to talk about. And a lot of you guys are saying, Dan, you're crazy. I can't even afford my first house. Well, yeah, we're going to talk about second homes today. And we're also going to talk about adjustable rate mortgages. But before you turn the dial, let's go over this. Okay, second homes. A lot of people are still buying them, especially down in the Florida markets. There's a lot of videos out there saying the Florida market's going to crash. Well, investors are going to start picking these up, and even people looking for second homes. So that's why we're doing this video. So the next piece of this puzzle is we're going to talk about adjustable rates. Yep, we're going to talk about adjustable rates. Why? Well, let's look at it this way. We're going to dissect it a little bit. In the past, the market crashed in 2008 because of adjustable rate mortgages, but there was much more to it. Those loans were basically liar loans. What we called in the business, they were called Nina loans. No income, no assets, and you can get 100% financing. Those loans are gone. And the adjustable rate features of those products are also gone as well. There was option arms and teaser rates and interest-only payments. All that is gone. Okay, so in today's market, adjustable rate mortgages are basically as secure as fixed. But, after 5 or 6 or 7 years, the rate's going to start to adjust. So now let's look at the future. What are interest rates supposed to go? Well, we know from this channel that most likely the Federal Reserve is done increasing rates over the next year, 2, 3, 5 maybe. Okay, so rates are going to come down from here. So what we're going to look at today is where fixed rates are for these products to buy a second home, and then we're going to look at adjustable rates. And this is where it's going to floor you because there's really hardly anybody out there doing adjustable rates on second homes that are giving you a substantial difference in your payment and rate to do these things. So let's get over to it and discuss it. So the first thing we want to talk about is right through here. What I did in probably what you guys do all the time is I'm looking to buy a house. What's my rate going to be? Well, be careful when you do that because this is advertising for everybody. These people would they show up on here. Why? Because they're advertising. They're paying this company, in this essence, Forbes, to be on their website. Okay, so when I plug in the data, let's go through the data points that we have in this purchase so we can break it down. I can show you the savings that you would have. So let's go through it. I'm saying I'm purchasing a home, and it is going to be a second home. Where is that? Let's see. I think it's in more options. It's my second home. I put in the zip code, but that's really a relative right now. I'm buying it for $550,000. In second homes, most likely you're always going to have to put down 20%. So there's my 20% down. And then I'm going to look at 30-year fixed and also adjustable rates in this chart. Credit score is 720 to 739, and that's what we're going to look at. So let's scroll down. So right through here, the best rate in the market right now, and there's only 3 showing up, so kind of odd, is 7.79. Okay, so that's what's that the APR is. The rate is 7.75 and there's no fees or whatever. So that's what it is. So we'll go with 7.79 is the rate. Okay. So now let's get over to this. If I was buying a $550,000 home, okay, and I was putting down 20%, my rate was 7.79, my principal and interest payment would be $3,164. Okay. But in this video, I did some research in the background and I found that we have a brand new lender that has fantastic adjustable rates, and they're giving us the ability to help push out this product for them. So not everybody, there might be a couple other lenders in the whole country offering this rate right now, but let's go through it. Right now, when I'm scanning in my system, I can get you a loan at 6.875 on what is this one? A 7-year ARM, and there would be 1 point included. Okay, so let me get you what the APR would be. Let's scroll down, and I did a calculation in ChatGPT on this specific property. Now, your APR may vary depending on your closing costs, what state you live in, what your title fees are going to be, and a whole bunch of other things. But what I wanted to calculate in here, just what that APR would be based on the point that you would have to pay for that loan. So when you scroll down, it's going to tell you, well, based on all this information, your APR would be 7%. Okay, again, the best rate out there right now would be on a 30-year fix, 7.79. So we're about 75, 80 basis points better. What would that do for your payment? Well, great question. Let's get over to it. When I plug that in, 6.875 is the rate, my payment would be $2,890 for a savings of, what is it, 2008, 9, 10, 11, about $250. Nothing to sneeze about. You can maybe could pay your association fees. So now let's look at it again. Let's look at the long-term consequences of this. So we go over to, we can even pull up the CME FedWatch tool. So let's do that while we're looking at this. Let's see where rates are expected to go over the next, 2 or 3 years, because I want you to be comfortable in getting into an adjustable rate mortgage. So we go down through here, we go to the FedWatch tool, and in 19 days, the Federal Reserve is going to meet, tell us what they're going to do. There's no chance they're going to cut rates at this next meeting. So there's a 93% chance they're going to do nothing at this meeting. Now let's get over to the probabilities or the aggregate, what they're going to do over the next couple years. Well, that's, here's what they're going to do by the end of next year. So it's telling us they're most likely going to cut rates. And this is telling us now there's probably a 58% chance they're going to cut in May, and then maybe another 50% chance at the end of the year they're going to cut. So nothing here really tells us that they're going to increase rates. Now let's get over to the dot plot. This is basically where the Federal Reserve, when they meet 4 times a year, they put a dot on where they expect rates to be at that time. So right through here, the federal funds rate back in 2024 was 4.25 to 4.5, and they hit it right on the button. So now what they're telling us is they will be coming down over the next few years. So think of it this way. If you have an adjustable rate mortgage, you don't have to refinance. You can ride this wave all the way down, and then when you're comfortable with where the rate sets, sit there as long as you can until rates start to rise again. Who knows when that might be, but ride out this until that time. And then at that time, when you're ready, we can refinance you into a fixed rate based on the term that you have remaining. Because when you refinance, you don't have to refinance back to a 30-year term. We can actually customize it to the remaining term that you have available now. So that's my proposal for you, and that's how I would be buying a house or a second home in 2025. So my name is Dan Frio. I do this report every day. I'm actually a mortgage loan officer licensed in all 50 states as well as Puerto Rico. If you'd like to reach out to me for some help, please do so. You can go to therateupdate.com, hit the Apply Now button. That'll launch you right to our website or our online application. We'd like to do those. We want you to schedule a consultation with us. So schedule a consultation for a one-on-one consultation with me, Alan, or David, and we'll just go through the numbers with you and make sure you're in the right position and the right mindset to get into a property. But if you'd rather call us, you can do that as well. Just scroll down to the bottom of the website, and there's our information right through there, 844-775-5626 if you want to give us a call, or just shoot me an email. And if you want me to give you a call, just include your phone number in there. Be more than happy to give you a call and answer your question live. So thanks so much for watching, guys. God bless. Have a fantastic evening. I'll see you next time. Bye-bye.